On this, Mr. K. Harihar, Head Global Markets, Firstrand Bank, is now joining us. Mr. Harihar, what do you think happened in the currency markets today?
I think in the last couple of days, what's been happening is importers have clearly entered the market and are covering the shorter-term exposures. And the primary driver for this seems to be that crude has started going up and is staying at slightly higher levels. It's not that it's in a runaway hurry and it's going to too higher level, but importers who were thinking that we could see much lower levels have decided that they would not want to be caught stranded. Also, the points that you mentioned are also relevant, that the FIs have really continued the selling streak and have sold about 3,000, 4,000 crores this month so far. So it clearly looks like they are still not bullish on the Indian equity or the debt market, because they've been selling in both the segments. So these two factors have come in the way of the rupee, and it's kind of come under pressure. Having said that, I think it's not that it's going to run away and fall too much and we'll see a repeat of the past. So I think that 71.50 on the right-hand side should be a very, very firm kind of level. And exporters are looking at every level to sell because the forward premiums are still looking very attractive. So I think it's in a range, but the range has moved out from that below 70 level to the above 70 level. And one other thing that people are watching is the global events. One is on the Brexit, how it pans out and how it settles, and of course how the U.S. Policies come out, because the U.S. interest rates, if you noticed, have edged up a very little bit to about 2.70, big number, 2.66 to 2.70. So the further fall in the U.S. interest rate seems to have kind of stopped. But I think even in the U.S., how the Mexico situation is going to be handled, the wall situation is going to be handled, and how the government shutdown is going to be fully addressed, I think those are the factors that the markets will watch out for. But the rupee should be in a range, but as I mentioned, at a slightly higher level.
What do you think will be the impact of Brexit? You think global currencies will again go for a toss?
Right now, it's interesting, the way the Brexit will, today we'll know which way it's going, but the market clearly is factoring in a defeat for the motion as proposed, and therefore that will happen. Now, logically, people assume that the next will be possibly a no confidence motion that will be submitted, but clearly the Conservative MPs will back up the Prime Minister and make sure that that doesn't happen. But what will happen next is, a series of options can happen. Right now, there's no clarity. Will they go for a fresh referendum to ascertain what is the mood of the nation? Or will they have a hard landing for Brexit and eject out on 31st of March and be a separate trade bloc? I think that is the one that will happen. So will it directly impact the global markets? I don't think so. But what will happen is it will eventually show up, its pressures on the Eurozone. So if UK manages to get out but does a very hard Brexit landing, then those parts of the Eurozone which have been toying, should we get out, should we stay in, I think they will firmly stay back, and that will make euro a much stronger currency than it is. But if you've been watching what the currency markets are telling you, the pound sterling is actually at 1.29 odd levels. It's looking steady, stronger. So within UK, the mood seems to be that we are losing more than gaining by staying with the Eurozone. So the currency is saying one thing. But as I mentioned, after 31st of March, we'll have to see which way UK manages to handle the exit, because we're already seeing a lot of job losses being announced by the steel companies, by the auto companies. And if that kind of becomes much larger and the larger part of the financial district shifts out of UK, then I think that it'll become a really hard kind of Brexit, which might create pressure on UK, but might actually, in a perverse way, kind of work to make sure that the other parts of Euro units are all going to stay within the Eurozone, thinking that that's going to be a better future for them.
Okay. We did have the back home. We did have the CPI and the IIP data. CPI, we had good news on that front. IIP, not so much. But overall, what do you think? What is India's macro setup looking like? And if we had to sort of understand the implications of the same on the Indian rupee?
I think the macro situation was first from the inflation point of view, as I mentioned, clearly looking much better. And explainable also. So the inflation has come down both at the WPI level and the CPI level, well below the 4% level. So that kind of augurs well from a purely monetary sense. But obviously, it also tells you that there is a bit of farm distress underneath. But when you disaggregate the data, we also found some data which is in a way comfortable, as in some of the upticks in inflation have actually come on account of health and education factors. So that's something that you can live with. So logically, this should have led to a bigger cry that, the rate cut should happen in February. and not in April as the market had earlier speculated. There are both schools of thought on this. Some people believe that an outright change in stance and a cut in the policy policy rate might be a bit too much. So we could see probably a change in the stance in February and hike and a cut in the policy rate in April. There is also a merit in this stance because we would want to see which way the vote on account of the budget is announced on Feb 1. And even though that is normally not like a budget, you will get a general sense of which way it's going. So the Reserve Bank of India could also have a better clarity on how much will be the gross borrowing requirement, which will give them a better handle on how much policy rate cut to effect. Having said that, I don't believe that the overall GDP numbers are as bad as the IIP data suggests. And the IIP number, as all of us know, has been very volatile. So I would look at the broader data and the lead indicators like car sales and CV sales, where it's clear that there is some slowdown that's happened. It's probably slowed down with a lag because when the petrol and diesel prices are much higher, at that time the CV sales and the car sales are continuing to be very robust. So some of it is a lead lag and they could catch up as the NBFC problems are slowly getting resolved. And funding is back to both the CV sector and the auto sector. So it could be a bit more slower, but definitely I don't think it's as bad as the IIP numbers suggested.
All right, Ms. Harihar, we leave it at that. Thanks so much for joining in on ET Now, giving us your perspective of the Indian currency. Remember, it